All right, folks, it's Wednesday, July 12th, and we have an update on the Fed's fight against inflation. And so we're going to give you guys a quick update, quick rundown here today. The markets are moving back up at the time of this recording, coming in just before 7 a.m. on the West Coast. 30,600 for your Bitcoin, 1884 for your Ethereum, and our XRPs at 47 cents. Let's take a look at the sticks right here. You see that we did go back up this morning. Little red candle, 4-hour chart. Okay, we're zoomed out looking at how we've been chopping sideways in this range for a couple weeks now. And Bitcoin moving back down as we record this one. We'll be watching this one closely. This morning when we did get the CPI inflation numbers, we did reach all the way up here to about 31,000. So we touched off at 31,000. We are moving back down. We'll see and watch how Bitcoin moves after this, but we are getting some action, some volatility hitting the markets as the June CPI inflation falls to 3%, below expectations of 3.1%. Core CPI inflation fell to 4.8%, below expectations of 5%. This is the first time core CPI has come in below 5% since December 2021. The 26-month battle against inflation may finally be nearing its end. Well, folks, I'm going to just give you my quick take without getting too deep into the weeds here. We don't even know what we're looking at anymore with this inflation data. They've changed how they calculate it multiple times. They, exclude food and energy out of the core CPI there. And so when we look at these numbers, it's like, what are we even looking at? What's the reality on the ground versus what is, the expectations? And then, we beat expectations and inflation's at 3%. And folks don't realize that if we are truly getting not only a decline in inflation, but a decline in prices, right? We're moving towards deflation. And I hope that folks really understand what that means, right? And, this doesn't really come as a surprise to us because we knew that the Fed has raised interest rates at the fastest pace in history. So damage was going to be done. And so folks get excited about these headlines, and then they see the market tick back up, and the AI bots on all the algorithms buy based off the news, and they push it back up temporarily, but they miss the macro trend that's at play here. We are entering a recession. Well, as I've been saying, once again, we redefined recession last year as well. So we redefine recession, we change up how we calculate inflation. What is the reality? Well, the reality is that our economy is based off debt. Fed raises interest rates at the fastest pace in history. That's breaking everything. That's breaking the everything bubble that we were experiencing. So we can clap that, okay, the Fed's winning their fight against inflation. I'm going to pay a little bit less at the grocery store or, for my food or energy. But that's not the case, actually. And I'm about to show you guys in the next couple tweets what I mean by that. Okay, but it also means that, our portfolios are going to get hit. Our businesses are going to struggle. Our real estate is going to be coming back down, right? The damage is being done, but it's going to continue unless we get a serious Fed pivot. So we can, clap that, they're beating the fight against inflation. But what that means is that the everything bubble, the party that we've all experienced, the participation trophy economy that we've, lived through for the past 10 years is over. So we have to understand what this means, right? And, I see a lot of folks, whatever news is going to make their little stock portfolio go up, that's what they want to hear without understanding the bigger macro picture here at play. But with that being said, folks, let me show you what I'm talking about. So this one from Charlie Bolello, he says this: U.S. CPI has moved down from a peak of 9.1% last June to 3% today. What's driving that decline? Lower rates of inflation in fuel oil, gasoline, gas utilities, used cars, medical care, apparel, new cars, food at home, electricity, and transportation. Shelter is the only major component that has a higher inflation rate than a year ago, and it is widely lagging indicator. Actual housing inflation is much lower, with home prices, rents down. So that's what I mean, is we can look at this and say, wow, our cost of shelter is going down. Well, that means that your house, the equity in your house is going down. That means that your rental property isn't going to be renting out for what you thought it was. And I was just looking again at houses in my area last night. 50K price slashes, rents dropping, property's been on the market for a year plus. It's crazy. And so once again, you got to look at the details here of how they're manipulating these statistics. Peter Schiff explains it right here. Stock market investors continue looking into the rear view mirror on inflation by focusing on declining CPI numbers, while ignoring those declines are causing oil and other commodity prices to rise and the US dollar to fall, which point to a much higher future CPI prints. So inflation might not be going away, right? And Don Johnson shares that Brent oil above $80 for the first time since April. And we noted this last week. Right as oil got into that $67 to $70 range, which is where the White House wants to fill back up the strategic petroleum reserves, OPEC does massive cuts to oil production, price goes back up. So we're still going to see food and energy continuing up. Shelter, if it's, if we're truly entering a real estate reset, right? That's also going to drive additional pain, tightening in that market as well. So we're not in the clear, right? Because we're beating our fight against inflation, we're sacrificing the United States economy. We're sacrificing your real estate equity. That's the truth on these numbers. But everyone likes to read headlines and see the stock market go up. Now, let's continue on. Game of Trades shares this one with us. A move above 4% on the 10-year Treasury yield caused the last two blowups in the financial markets. UK pension fund, US regional banks. Currently, the 10-year yield is at 3.99%. Now, I guess we got lucky because what happened today with the CPI print, that 10-year Treasury actually rolled back over. Now it's at about 3.9%. So it did roll back over, and we avoided catastrophe for now. Okay, but we're watching this one closely, guys, because a lot of folks just get excited off the headlines without looking a little bit closer when it comes to real estate. The first half of 2023 is in the books. Through June, national home price growth in 23 looks like a normal year. So what does that mean? Well, it means that was the peak selling season. If you couldn't get it sold by now, you might be in some trouble, because look at these markets all the way back to 2000 through 2022. You can see from here on out through the rest of the year, we're going to get price declines. We're going to get price declines. It's just a matter of how big are those declines going to be. A large part of that's going to be the Fed's move on the interest rates. You're already seeing the average U.S. Interest rate on the mortgage, 7.3%. This is a level that we haven't seen in over 20 years. And this is breaking the real estate market, okay? And this is going to be an incredible opportunity for us to take advantage of. I'm very excited about it. But I'm warning for folks who think that everything's fine, right? It's just going to be good times. It's not the case. Used car prices are now deflating faster than they did in 2008, and we haven't seen a meaningful rise in supply yet. So, there's always two sides to every coin, though, right? Used car prices deflating now faster than 2009, not a good indicator of our economy and, whether or not we're actually in a recession. But, if you're looking to buy a used car, your deal could finally be coming along. Good news for you. Same thing with real estate, right? We are going to be rewarded for being patient. I didn't FOMO into the American dream of a white picket fence, and I need to call myself a homeowner. Didn't fall for that. And I know a lot of people discredit me when it comes to real estate because I don't own a home. They think that I don't know real estate, that I shouldn't have an opinion. And people don't like when you touch on the real estate deal and you tell them, hey, there's some trouble lingering here. It's not just going to be up forever. I know everybody wants it to be up forever, right? But there's the other side of that, which is opportunity. Right? Just because the equity in your main house is going down doesn't mean you can't go out and buy a rental property. Doesn't mean you can't go out and buy an investment. Maybe it's time to buy a used car for your daughter, or whatever it may be. Used car prices about to fall off and falling off at the fastest pace that we've seen since 2008. So there's two sides to each coin. We just got to be able to ride out the chaos in the meantime, right? As long as your cash flow covers your debt service, whether it's your business or whether it's your household situation, you're going to be able to ride out the storm, and you're going to be able to buy deals. And the deals are going to be coming. Now, we continue on, folks. We look at this in regards to the crimes that have been facilitated by these banks, Wall Street. And these are the same guys that have, bashed crypto and everything, but we continue to see them. Bank of America ordered to pay $250 million for charging illegal fees and opening credit card accounts without customer consent. So the games that these banks loves to play. The $7 trillion asset manager giant Vanguard Group now owns a 10% stake in Riot Blockchain, the world's largest Bitcoin mining company. So Wall Street is moving in a major way. And I actually have a whole video that I want to put out in regards to this. I actually think that there's a serious potential for basically Wall Street and the elites to fork and pivot Bitcoin and basically rug pull Bitcoin as we know it and create a new version of Bitcoin, fork the network that will be based off of environmentally friendly Bitcoin mining, or, proof of sustainable mining practices. I really think that there's a way, because I was listening to a Twitter space yesterday and they talked about how in the Bitcoin ETF filing for BlackRock, they said that if Bitcoin forks, BlackRock gets to pick which fork to go with. And I think that they may be setting that. Now, I'm putting on my tinfoil hat, of course, but that's what we do here, is we try to think ahead on, how are the elites positioning themselves and what do they got planned for us next? I think, and you've heard Kevin O'Leary say this as well, that nobody wants China's Bitcoin, right? No, which China banned Bitcoin mining. So, there's not really much mined Bitcoin coming from China anymore anyways. But people want healthy, sustainable Bitcoin, or at least Wall Street does, because it impacts their ESG score. So I think I'm going to do a separate video on this kind of more in depth, but I think that there's a serious potential for them to actually fork Bitcoin down the road. Vanguard taking control of the Riot blockchains. They're trying to pick up more of this infrastructure. When China banned it, a lot of it came to the United States. And so now it's under control of those folks who are a little bit more consciously minded about, saving the environment or whatever their story or deal may be. You guys know I'm not a tree hugger, but I'm just watching how these elites are positioning themselves. And I think that there's a serious potential for them to fork Bitcoin and say, well, this new fork of Bitcoin is going to be only the sustainably mined Bitcoin, right? And so I'll drop another video on that at here some point here soon. In regards to the crypto update, guys, we're going to be talking about the library case. The final ruling came out in the library case. We've been waiting for this one. John Dean reports, and we got some good, we got some bad news in this. He says, I asked the judge to clarify that the token itself is not the security, just as Judge Castell did in Telegram. He declined to do so because he said that specific issues wasn't litigated. And he believes in exercising judicial restraint. He wrote, it suffices to say that merely holding LBC or purchasing it for consumptive purposes is inefficient to bring third parties within the purview of the injunction. He said, I take no position on whether the registration requirement applies to secondary market offerings of LBC by persons or entities not subject to the injunction. He chose to punt the issue. I'm disappointed the judge wasn't more aggressive like he was in the November and January hearings, but he chose to be super conservative. The SEC can't argue his decision applies to the secondary market. However, that's better than nothing. And we scroll on down here, you see David Schwartz says this. It's at least a victory that it was made clear that ordinary use of the token doesn't violate the injunction. John Dean says, correct. Also, although the judge wouldn't say the token itself is not the security, he said his order doesn't apply to secondary sales because he takes no position, and by recognizing there is valid consumptive purposes to purchase the token, it triggers the Foreman case, which says securities laws do not apply to assets acquired for consumptive use. Thus, the SEC wouldn't have jurisdiction. So, minor victory, little victory here for us in the crypto community, okay? And this is important, right? And I think that you got to look at this as a victory for those of us in the Ripple versus SEC lawsuit watching this case and wondering what's going to happen to the secondary market. I think that the fact that they didn't have it, right? Obviously, it didn't relate, right? He's saying basically it didn't relate. I'm punting the issue because it doesn't relate. It's not in the purview of this injunction. I think that it reiterates the point that, not all secondary market sales are, not securities, because someone could sell Library as a security. Somebody could sell XRP as a security. But as we've been saying, where this goes, is it a token that is used for utility, that is used for consumption, that is not packaged up as a security, will not be a security. It's very clear. The securities laws is very clear, right? And so when I trade my XRP for US dollars on Uphold, that is not a sale of a security. Right? That's exchanging two commodities. That's exchanging two currencies. And that's that. It's not an investment contract. It doesn't meet any prongs of the Howey test. And so I think that we do have to take this as a minor victory. And I think a preview of what could be coming down the road in this Ripple versus SEC case. John Deaton says this, though. He says, this decision gives us nothing in Ripple. I think this decision may affirm the opinion of some attorneys like Mark Fagel and Jesse Hines that Judge Torres may not rule or comment on anything regarding secondary sales of XRP, as she could adopt a similar approach. As I've explained before, I understand why smart lawyers believe that. Ironically, the library judge commented that he believes secondary sales were being litigated in the Ripple case. This decision, however, doesn't impact my belief that Judge Torres will at least comment on secondary sales. How far she goes, John puts his hands up, right? So, this is the thing, is that I don't think that there's no chance that Judge Torres is going to come out and say that all secondary sales are securities. That would be saying that the underlying asset, XRP, is a security, which has never been done in any case that's been tried against the Howey test in the whole 70, 80 years that we've had the Howey test. So, I, once again, still think that we are in the clear in the secondary markets as long as you're not packaging up your asset in an investment contract that meets all, the prongs of the Howey test. You are not selling a security. You will be cleared and good to go. But, what's sad to see is that this judge decided to really strike down and go after Library and the company, and they're going to have to be shutting down their operations. And what happens to Library token from here is basically based off the community, which is funny, proves its decentralization, right, of the utility token, of the companies quitting and shutting down their doors, and the token's going to continue, and now it's up to the community to continue moving it forward. So once again, you have to understand that in both of these cases, they're looking at the sales by Library, and in the Ripple case, they were looking at the sales by Ripple. The SEC argued that it did include all of the secondary market, and I believe that's going to fail. And whether or not Judge Torres comments, that's the big question, right? But like I said, this is really troubling. John says, this is troubling to me. Mark Fagel, you've been on both sides of these cases. These seem unduly punitive to me. If you've read the November 2022 hearings transcript, then you know Jeremy didn't hold back telling the judge what he thought about the process. In that same transcript, the judge tells the SEC that he denied the fair notice defense. But let's be honest, there was significant confusion in the market when Library did what it did. But he then writes this: I think it's inconsistent, inappropriate, and punitive. Basically, you didn't show remorse after I ruled you broke the law, so I'm maximizing the penalty. Thoughts? And so they say right here, and third, at no point has Library acknowledged the unlawfulness of its conduct. And Jeremy Coffin, who is the CEO of Library, says, all I've ever wanted to do is follow the law. No one at the SEC nor the federal judge himself can tell me what the law allows and doesn't allow. I'd respect the American government if it had a rule of law. It does not, so I don't and won't respect it, nor will I apologize. Right? This is ridiculous, right? So he didn't show remorse after the judge ruled that he broke the law, so the judge decided to maximize the penalty. I mean, this guy didn't kill anybody, right? He's not showing no remorse for incredible crimes, the most heinous crimes. No. The only people, this is not protecting anybody. And that's the end conclusion for all of this, guys, is that the SEC is not here to protect anybody, but they're here to shut down people that are trying to build legitimate businesses, trying to utilize this technology, trying to build utility tokens. We have no clarity, and the SEC tries to go after and strike down and destroy American entrepreneurs and businesses. And the judge here, a weak position that they took, really punting the issue, very soft. And then choosing to go after and strike down on the Library guys very heavily is unwarranted, in my opinion. And this is our American judicial system that we are in the middle of trying to save. I say that we still have somewhat of a rule of law, but in regards to what's taking place here, this is absolutely ridiculous, right? Jeremy knows, just like we do, that there still is no clarity from Congress, right? That Gary Gensler's testimony himself says that he doesn't have jurisdiction over exchanges. They don't even know what they're ruling against or, what they're doing here, but they continue to bring, criminal actions and strike down these companies and shut them down and basically make them pay fines. But who gets protected? Are any of the Library token holders protected? No, right? everybody who is involved in this is damaged. Everyone who's involved in this is hurt. And this is not what the mission of the SEC is supposed to be about, right? It's just another feather that they get to put in their hat, put in their cap, and good guy Gary Gensler gets to continue saying that he's protecting us. It's an absolute joke. Now, to wrap up this session, folks, the vaults rising didn't last long. I had shown you guys, I think it was last week, the COMEX vaults had actually risen. They had put some more silver back up in those vaults. And I warned, I said, guys, this is them just preparing during the summer slowdown, right? They're filling the vaults back up while they can before we get ready to drain them once again. And sure enough, yesterday we get a massive withdrawal, 1.16 million ounces from the COMEX silver vaults. And so the draining of the vaults continues. Our community continues to be doing that as well. If you guys are looking to drain the vaults of some precious metals, we can get them shipped directly to you, or we can roll over your 401k retirement account. Just head on over to my website, zachrector.com. And also, by the way, my good friend Andy Sheckman Miles Franklin actually just shared 3 weekly specials that are taking place right now. I don't have them in front of me, but I encourage you guys to go to my website. Let us know if you want the metal shipped directly to you. Roll over your 401k, and we can help you get that done. Other than that, folks, it's just an absolute pleasure to bring this update to you guys this morning. We're going to be watching this market closely. We're getting on the volatilities coming back, okay? And so let's continue to enjoy our summer while we prepare to continue to take action, because like I said, there's deals coming in every asset class. There's deals coming in real estate. The crypto market, I don't think, is in the clear yet either. But we also see that the recession is going to be continuing. And for us, it's about surviving through this chaos, through the distractions, and reading past the headlines, because everybody's going to be running with this headline today, right? Inflation fight is coming back down. The Fed is winning. It's all good. Markets go back up. Pump my bags, please, without realizing the implication of what this means for the broader economy as a whole. So that's why we continue to stay prepping. That's why we continue to stay focused on growing our side hustle, on growing our business, putting cash on the sidelines to invest in real estate. And that is what we are in the middle of doing right now. And when crypto goes, that's just going to be more fuel on the fire of what we're already building now. And I encourage you guys to do the same, right? Don't just sit around and wait for the moon date. Don't just sit around and cry because we're in a bear market. Continue to build your relationships, continue to build out the infrastructure, your businesses, so that when our crypto does go, when we come back into an actual bull market, you're going to have more fuel to put on your fire. And we're going to be sending this thing into the new financial system. I appreciate all of you guys. Please, can you do me a favor though and smash the thumbs up on the way out? Make sure you subscribe, hit that notification bell, and just head on over to my website, zachrector.com. God bless you. We'll see you in the next one.